Hello everyone, this is Professor Kent. Today we are going to go through the homework that I wasn't able to cover in our last class. So the questions that I didn't get a chance to cover with you, I'm going to post this video to our Blackboard so that you're able to go through the questions that we weren't able to go through. So the first question that I wanted to go through was that the 1329, we just did the first part of it, but I wanted to take the time to go through the question with you guys. The purpose of this recording is that you might be able to, you might be asked a question regarding these questions in your assignment so that you're able to answer those questions when you are doing your assignments, assignment one for this course. So this question is a brief exercise. We're going to doing exercise 1329. And 1329, there's four independent situations that we needed to know. What should we do if there is a contingency? Just the word itself, contingency is an existing condition involving an uncertainty. So that means how do we record it? So let's go through this question together and make sense out of what the question is asking us to do. During 2020, Sugar Post Inc. became involved in a tax dispute. So the company in 2020 involved in a tax dispute with the CRA. Sugar Post tax lawyers have told management that Sugar Post will likely lose this dispute. They will believe that Sugar Post. So then the first word is will likely. The is will likely. When you're looking at the word will likely, that means the chances of losing is very high. And then say they also believe that Sugar Post will have to pay the Receiver General for Canada between 900 to 1.4 million. After 2020, the financial statements were issued. The case was settled on with the Canada Revenue Agency for 1.2 million. What we wanted to do is how much since it's will likely. So if the company is following ISP, if it's will likely, means the chances of losing is very high. If chances of losing is very high, we have to accrue the amount. We have to record an accrued liability, and also we have to disclose it on our financial statements. So now the word is will likely, means the chances are very high. And the other part we needed to know is how much should we accrue, if we're going to disclose it. Now, how much should we accrue? The accrued amount, now we are given that we might lose 900,000, or the highest we could lose is 1.4 million. So, and if this is the case under the SB, what happens is this is the lowest we can lose, this is the highest we could lose. Since the company is following SP, they will have to record a litigation expense and litigation liability for the lower amount. So the when it's an SP, they will be recording the liability for a lower amount, and they will have to disclose it. How much they will be disclosing? They will be disclosing that the company is involved in a lawsuit and with the Canada Revenue Agency. We could lose, the lowest we could lose is 900,000, and the highest we could lose is 1.4 million. If we were to do this entry, this will be my debit entry and this will be my credit entry. Now, if you go to situation two is that towards the end of Sui Lai Corporation 2020 fiscal year, the employer union talks broke off, means there's a company has a union, the union talk broke off means that the union decided that their employees will go on a strike. So the strike was that they wanted a wage increase. With the wage rate for the upcoming 2 years still unresolved. Just before the new year, however, the contract was signed and they gave employees the 5%. Who gave raise? The company. The company was Sui. They were in the dispute with the union, and union fights behalf of the employees. They said the employees wanted, or the union wanted, a 5% increase for the next 2 years. For the they not tax, they wanted a 5% increase in their hourly rate. What happens is this lawsuit was there's no lawsuit here. They were just in this case there was unresolved dispute. This was not a lawsuit. What happened was that the however the contract was signed, so they reached an agreement. The company decided to give the employees 5% increase. So they're saying that, what do we do with this? Prepare the entry, if any, that Sui Lai Corporation should make at December 31st. So now there was nothing is happening in 2020. So what happens in 2021? The employees will get an increase. If they'll get, how much increase they'll get increase 5%. But what this transaction is asking, do we record anything on December 31st? December 31st, 2020, we will not be recording anything, because there is no liability to be recorded at this point. So there's nothing to record. Then we have a situation number 3. Situation number 3 is, they're saying on October 1st, 2020, the Provincial Environmental Ministry identified Jackhammer Chemical Inc. as a potential responsible party in chemical spill. So there was a chemical spill, and then the ministry identified that the company, if we are the company Jackhammer is the company, they potentially were responsible for a chemical spill. Jackhammer's management, along with the legal counsel are the lawyers of Jackhammer, and the management of Jackhammer concluded that it is likely. So if the word is it is likely means we're going to lose this lawsuit, or we have to pay the damage. Will be found responsible for the damage, and a reasonable estimate of these damages is 5 million. And Jackhammer has insurance policy. Of course, if it's a big company, and every company has an insurance policy. It's just like a car. When you have a car, you have insurance policy, and we have a deductible portion that we have to pay the insurance company. The rest, the insurance company deals with the damage. So assuming the company follows the ASPE, how should Jackhammer Chemical report this information on its financial statement? So we know that the word is will likely. If it's will likely, we know we have to disclose a note on our financial statement, and then we have to accrue some of the liability. We want to know how much we should accrue in this case. So now the information that we are given, company which is Jackhammer, a company that is a Jackhammer, what happened is they have an insurance policy. The insurance policy will cover the damage up to 9 million. This is the damage they will cover. But now the actual damage that the company, they estimate that the damage will be 5 million, which is lower than the policy that we have. However, our deductible portion of this policy is 500,000. So the question is how much we know we have to disclose it. The other question is how much we should accrue. The accrued amount will be the deductible amount. So then the company will pay, even though we're getting sued for the damage will be 5 million. However, we have an insurance policy that they will pay up to the damage of 9 million. when we're doing an accrued entry, we will be doing an accrued entry for the deductible portion only. So how much is our deductible portion? Our deductible portion is 500,000. That's what the company will be paying out of their pocket. So in this case, you're going to be debit the expense. In case it'll be a litigation expense and litigation liability, the amount will be 500,000, which will be just the deductible portion, not the estimate loss, because we're not going to be, company is not going to be paying it out of their pocket. They'll be getting paid from the insurance company. Now let's go to the next question. Next question that I wanted to cover in class that we didn't get a chance to cover was brief exercise 1330. At December 31st, 2020, Lawton and Border Inc. is involved in a lawsuit. So there's a lawsuit we could lose or we might not lose. So this question is, we wanted to deal with both IFRS and SB standard. What is the difference between the both? We will show you what is the difference between the both in this question. So we are going to be doing it IFRS and we are following the SB standards. Now, if you look at the word, it's a prepared the December 31st and 31st entry, assuming probable. When the word is called probable, that means it's the terminology that uses under the IFRS. And if it's a very likely, it's the word that is terminology that is used by the SB standards. Again, if you wanted to go through more reading for this, it's in page 1335 of your book. So IFRS uses probable. So if they're using probable, so when they're saying probable, the word probable is used under IFRS. Very likely is used, the terminology is used under SB. They both are saying the same thing. Probable is that most likely, we are very likely that we are going to lose this lawsuit. If we're going to lose it, we're going to lose the 700,000. So if it's a probable and very likely, same thing. Under the IFRS, we have to disclose it. If we disclose it, can we estimate our lawsuit? Yes, we can estimate it. If we can estimate it, our lawsuit will be for the 700,000. So we have to record an accrued liability. In this case, it will be litigation expense and litigation liability of 700,000. Here will be a 700,000 here too. So when under the SB, it's very likely that we are going to lose this lawsuit. If we're going to lose it, we have to disclose on our financial statement. We also have to record an accrued liability. Our entry will be exactly the same as IFRS. It'll be litigation expense and litigation liability of 700,000. Let's go to our next question, saying prepare the December 31st entry if assuming that it is probable, although not likely. So what do we do? Although not likely. Although not likely means now there's two things are happening. We have IFRS, we have an SB. So probable will be the same thing what we are doing under the under IFRS is a probable. I forgot a B. PROBAB, probable. So let me erase it again. If we have a probable, if it's a probable, exactly the same thing is happening. Now under the IFRS, if it's a probable, we are going to disclose it. And can we estimate our liability? Yes, we can estimate it. If we can estimate it, we are going to record an accrued liability. Our entry will be exactly the same what we did it in part A. We have a litigation expense and litigation liability for 700,000. Now they're saying now the word is under ASPE. Here the first part of the question was saying very likely. It's not likely. If it's not likely, what do we do? That means it's not. It cannot be. So if it's not likely, means the chances of losing is slight. If the chances of losing it slightly, we'll just have to disclose it in our financial statement. We do not need to record any journal entry at this point. Now, the next one, would your answer change if it's not probable? If the word is not probable, if the word is not probable, not the word is not probable, we use it under the IFRS standards. Not probable, it's under IFRS standard. If it's not probable, there's no entry is required. No entry is required under the no entry will be recorded under the IFRS standard. Now let's go to the other exercise that I wanted to do. Two more questions that I wanted to do is that on December, this is a brief exercise 1331. Saddle Corporation was recently sued by a competitor for patent infringement. The lawyers have determined that it is probable. So when they use the word probable, we know that we have to follow IFRS standards, and the word are very likely is the terminology used under ASPE. Why is it in the same sentence? Because the not in the same question, because the author wants you to do the question under the IFRS standards and under the ASPE standards. If they're asking you to do that under the both standards, that's why the question is there with both. The saddle will lose. The case saddle will have to pay between the amount will be 100,000 and the 250,000 in the damage. And first we have to follow IFRS. Then the next part of the question we are going to follow the ASPE. In this case we are comparing what amount should be accrued and how much what amount should be accrued. And then the first entry is that we know that we're going to lose between the 100,000 to 250,000. We don't know how much is going to lose because the actual lawsuit hasn't been finalized yet. So when we finalize, that's when we know the actual amount. So under the IFRS, we know it is probable. If it's a probable, we know we have to disclose it, and we also have to accrue. We record an accrued liability, so we have to accrue some liability. So if we are going to accrue it under the IFRS, what we are going to do, we have to take the amount, the lowest amount, then we know the highest amount we could lose. We're going to add them together, which is going to be 350,000 divided by 2, which is going to be 175,000. So when we're recording an accrued liability, we are going to do litigation expense and a litigation liability. This will be my debit entry, and this will be my credit entry of 175,000. So that's the other entry we are going to do. That's the entry we're going to do. Now, what is the difference between the both? Now, the only difference is how much amount should be accrued. Everything else will be same. So we know that if the company was following ASPE, this is going to be your this is going to be my lowest amount that I'm going to lose. This is the highest amount that I am going to be lose. Now the word is very likely. If it's very likely, we are going to lose it likely. If we are going to lose this, so we have to disclose it. And if you're disclosing, we want to know, are we going to accrue it? Yes, we are going to accrue it. What amount are we going to accrue it? In this case, if we're following the ASPE standards, we are going to be accruing the lowest amount. our entry will be litigation expense of 100,000 and litigation liability, or liability will be 100,000. So now when you're disclosing it, what we wanted to do is we want to cover our financial statement. The management don't want to get a lawsuit from the um, from the uh, from the people that are looking at our financial statement, and they're investing their their they're making their investment decisions by looking at our financial statement. And when we are disclosing it, in your disclosure amount, you are going to say that the company is being sued for 250,000. The company is being sued for 250,000. We recorded a liability of 100,000. We are disclosing that there could be an additional expenses for the next year at the time, additional expenses that we might have an additional expenses of 150,000. So most notes are written like that. That Jackhammer will not Sadler Inc. will record a note saying that we recorded a current litigation liability of 100,000, but our actual liability could be more than 100,000. It could be go up to 250,000. So the additional 150,000 liability, we are disclosing it in our note. We are not recording an accrued liability for the 150,000. We're just disclosing it in our note. That we could have an additional expense of 150,000. So let's see what else I have to do. The other thing I talked about our current ratios briefly, but if you're asked to do a current ratio, how do we do a current ratio? In other words, I will not be asking you this type of question, but if in case you needed to learn how to do, it is in your course outline that we're supposed to cover this material. So I'm just covering it for, even though you have done it, I'm covering it here so you have an idea if you were to do this type of question in your next future or in your work. First, they want you to do a current ratio, quick ratio, and they're asking you to calculate the days payable outstanding in year 2021 and year 2022. So we have 2 years they want us to do it. The question 2021. So the first ratio they want us to do is current ratio. Current ratio, the formula for current ratio is current asset over current liability. What are some of our current, now in the question they've given us the current assets, they are giving us the current liability. All you're doing is you are just using the formula to calculate your current ratio. So we are going, what are your current assets in 2020? Our current assets are 8250, our current liabilities 3,800. It'll give us a current ratio of 2.17. So if I were to do it in 2021, I have a current assets and I have a current liability. In this case, our current assets are 7,800. Our current liability is 3,700. Is that your current ratio is 2.1. Why do we need a current? Why do we have to calculate it? Company wants to compare their ratios from one year to another year, and sometimes the investor look at their ratios. We have to provide the ratios on our financial statement. What the company does is the common shareholders or the bank, they look at the current ratio. They want to look at the current ratios going up or current ratio is going down. In this case, what they're doing is that your current ratio went up, means we have more assets. The company, the bank will look at it. If they're giving you a loan, saying that they have more assets, so that you are able to pay your liabilities. The next one is your quick ratio. What is the quick ratio? That the current asset that can be converted into cash very quickly. When that's when something that can be converted into cash very quickly, then you only cash, that'll be your fair value net income investment and your AR. Inventory cannot be converted into cash very quickly because you have to find a buyer, and so is your prepaid expenses. That's the other thing. So when you're doing the current ratio, you're going to add the 650 plus your 500 plus your 900 divided by your current liability. In this case, your current liability is 3800. That will give you 0.54. Then when you're doing it for year 2021, your 700, your 500, and your 1000 divided by your current liability will give me an answer of 0.59. And then you calculate the days payable outstanding. Days payable. So when we're doing it for 2022, and then we'll do it for 2021. What is the formula for that? The formula for that is average accounts payable divided by the average cost of goods sold, average. When the word is average, means what you're going to, I need a little bit more. When you're looking at accounts payable, what you're going to do is the average. When they give you an average, you have to take the average, means beginning of 1 year and then ending of that year. So beginning accounts payable was 1700, the ending accounts payable was 1550. So what we're going to do is 1550 plus your 1700 divided by 2, and then you're going to take your cost of goods sold. In this case, our cost of goods sold was 15,000. So we're going to take 15,000. When you're looking at the word, they're saying average cost of goods sales outstanding for the year. So in a year there's 365 days, and that will give us the average days, which is 39.54 days in 2021. 22, when we're doing it, we're going to do the same thing. So when you're doing it for the accounts payable, then for the 2021, you're going to look at your 20 ending of 2020, and then ending of your 2021. So in this case, it will be 1700 plus your 1750 divided by 2 divided by your cost of goods sold. In this case, our cost of goods sold is 18,000 divided by 365 days in a year, and that will give me 34.9 days. What does this tells us? Because this tells us that the company has an account cost of goods sold, and they're connecting the cost of goods sold with your accounts payable. That means that in average, how many days are we taking to pay our inventory that we are purchasing? So these are the questions that I didn't get a chance to cover in our last class. What I did was that I'm recording this and I will be posting it. I also posted a lecture recording for chapter 14. What I wanted to do is that I wanted to go through that lecture recording and come back in the class prepared that we are able to do. We will be able to go through some of the brief exercises and more of the homework questions, so that you could cover the material. We can cover more material. Even though I posted the recording, I will still be going through some of the material with you guys if you have any questions. Thank you so much for listening, and I will see you on Monday's class. Thank you.